welcome to Commodity Champions. I'm Manisha Gupta. Gold exchange-traded funds in India continue to see strong investor interest amid global uncertainty. Data from the Association of Mutual Funds in India shows that the gold ETFs attracted more than 7,700 crore rupees in net inflows in the month of October. That's a slight dip from the record 8,300 crore rupees plus in the month of September, but still far ahead of the inflows into large cap, mid cap and small cap funds. So far in the year 2025, the cumulative net inflows into gold ETFs have crossed 27,500 crore rupees. Globally too, investors can't seem to get enough of the safe haven asset. They poured in $8.2 billion into the ETFs for the month of October, marking it the fifth straight month of inflows. The World Gold Council data shows that the global value of gold ETF assets has now climbed to about $503 billion. But what is driving this rush? And joining us now to take this discussion forward is Vikram Dhawan. He's head of Commodities and Fund Manager at Nippon India Mutual Fund. Vikram, hi, thank you for joining in. And what a year this has been so far for 2025. I'll talk about gold and silver both, but gold first, and strong, stupendous numbers coming in for that one. The last 2 months itself has seen 16,000 crores of inflows come into the market. Are you, first of all, looking at November going the same way?
Thank you very much, Manisha, for inviting me on your show. Despite the strong flows into gold ETFs, let's talk about India first. The gold ETF, and I mean, if you include the silver ETF AUM also, they are barely 2% of the total mutual fund AUM. So by any stretch of imagination, Indian investors are far from being equal weight or underweight. So this is something which is still work in progress. Even globally also, I mean, last year, these various surveys which were done, roughly about 70% of the managed money was either underweight or had no exposure to precious metals. That figure is still, about 40-50%. So still it is work in progress, both locally and globally. And I think there is a bit of inclination now towards regulated instruments, and whatever demand destruction we saw on the physical or on jewelry side, it is more than being compensated by investment products like ETFs.
Vikram, the last couple of months clearly have been record of sorts. I mean, we've seen in the last 2 or 3 years on how even as you said, the numbers are pretty strong as compared to the overall pie there. But the last couple of months have been quite on the stronger side. Record numbers, and this is coming at a time when gold is hitting record highs as well. Are these the new participants, or are these equity participants who seem to be moving to gold ETFs in some sense?
So I think it is a combination of both. Primarily, I think what is playing out in the in the precious metals market is the asset allocation story. I mean, we are seeing now for the past 1 year that some sort of a global reset is happening in asset allocation across the world. We saw the central banks doing it now for more than a decade, diversifying away from dollar. I think it is now gone to the main street. That is one story which is continuing. I think there, as far as the asset allocation is concerned, the allocation to precious metals, especially gold, is more on account of hedging and diversification and risk management. And I think that is not something which is tactical, or it is more focused on what kind of returns the investors can expect. Silver, in case of silver, obviously, there is this green tech story at the background. There, the flows could be partly tactical because of the higher volatility. But I think overall, the mentality of the investors, at least what we come across, both large and small, is that majority of them are looking towards precious metals as more of a diversification, and any extraordinary returns which occur is a bonus.
All right. Just coming back to gold one more time, Vikram, and with the kind of pattern that we are looking at, have you seen a lot of redemptions come into the space, or is it still net inflows that we are looking at? The last 2 months clearly have shown that, but November till time, and I'm not asking for numbers, but just about a pattern and a feel that you have from markets.
So, Manisha, I think something very interesting has happened in 2025 is that we have seen some sort of a behavioral change in the investors, not only in India, but across the world. There is definitely, more interest towards investment products, which also include gold bars and coins, and ETF also obviously is at the top of it. So, and at the same time, we have seen demand destruction, double-digit demand destruction in jewelry. And at first, it was seen to be cyclical, maybe beginning of the year or end of last year. But I think this trend has persisted for long enough to be structural. So what we are seeing is that investors are not only trying to relish the ornamental beauty of gold, they're also trying to relish the financial and the economic attributes of the metal also. So I think this is one change, which means that physical demand, while will be very important, but I think investment demand will now be a very significantly more important part of the market. I mean, this was one of the first years actually on record where the flows into coins and bars and ETF put together far outpaced the flows into jewelry. So I think this is one trend which will perhaps is what is driving the prices and slightly changing the nature of the gold market.
Oh, absolutely. Vikram, coming on silver as well, and that clearly has been a story of the year, outperforming gold on one side, and clearly the kind of inflows that we've seen onto this one. In physical markets, investment yet again continues to trump what we've seen in sense of jewelry buying or cutlery or statues for that matter. And then ETF has been a story to reckon. What are the kind of numbers that we're looking at and the kind of temporary freeze that we saw come in the month of much of October and then now November as well? Is it anywhere near to opening now?
So, Manisha, again, I mean, despite these fantastic numbers, ETFs across the world and especially in India are still a very small part of the overall physical market. I mean, I would say that on a best case scenario for gold, we may be about 3 to 5% of the total market, which is largely physical. In silver, it could be slightly higher, but again, maybe 5 to 8% or maybe 9%. So we are still pretty much the rounding off number of the market. India still remains largely a physical market. But again, what you have to appreciate is that despite higher prices, we have had record season in both gold and silver, which means that the overall demand, while has been slightly down, but has stood up in the face of higher prices. Now, particularly about ETFs, I think the bulk of the flows, the larger flows continue to be from the asset allocation point of view, multi-asset strategy point of view. Yes, there is an element of tactical, investment and trading also, which obviously happens in every asset class. But broadly, what we have seen, and I think this was very much clear by the correction that we saw in gold and silver prices, that we saw roughly about 150 tons of gold coming out of gold ETFs and futures and other products, and roughly about 1,200 coming out of silver. And I think after that we have seen recovery in prices, which means that largely or rather I would say the tactical part of the market is still in minority, not in majority. But again, I think there is obviously a flip side to it. As more and more investors migrate to ETFs, which are liquid, and liquidity means that while there is an ease of subscription, there is also an ease of redemption. So you will see that this kind of market will have slightly higher volatility within the bull run than what we have seen in the past bull markets.
Vikram, it's quite safe to say that 2025 belonged to precious metals in some sense. All-time highs on one side and the kind of gains that we've seen and the interest and headlines that it continued to make. 2026, and we do understand this about gold and silver, and you would know as well, and allude to that, please, that we don't see years of this kind of a run-up when it comes to gold and silver in sense of a bull run there. How would you then approach 2026? What would you advise investors also in sense of prices and investment?
So obviously, we have, the market, which is, which is driven by the fundamentals. And as long as the fundamentals or the key, drivers of the prices are, remaining significant or strong, you would see the bull market continuing. But again, the intensity of the bull market may vary. And please appreciate that gold is one security which has been around. Gold and silver are securities which have been around for thousands of years. So they tend to have slightly, protracted consolidation and corrections also. We are not hinting at that that's going to happen anytime soon. But fact of the matter is that this is one market which will test your patience and and punish your impatience, as the case may be. But looking ahead, I think most of the drivers. I think if I were to pick up just one, fundamental part of each metal, when we talk about gold, it is definitely the so-called debasement trade. And even if you're not a believer in debasement trade, I mean, the numbers are pretty compelling. The global debt is almost $100 trillion. We're just talking about the sovereign debt, which is now either crossed or approaching $100 trillion. And the scariest part is that none of the, the indebted nations are actually talking about austerity or cutting, expenditure or increasing taxes, because obviously it is, very, very unpopular strategy, especially in a democracy. Similarly, for silver, if you see, yes, the climate change is pretty much out there. I mean, by certain forecast, in the second half of this year, the global temperatures in most of the regions are expected to be 1.5 degree higher than the long-term averages. So I think these things are pretty much there. Out in the open to see. But obviously, manifestation of these things will not happen overnight or in the close. I'm not saying we're going to have a debt crisis anytime soon or we'll have a climate crisis anytime soon, but these are all very long-term trends which takes years and decades to, set in. So only a prudent investor who's looking for long-term, wealth creation would be interested in them. And if you are somebody who's looking towards instant gratification, I would suggest that maybe there are better plays in town to, approach.
Fair point that, Vikram. As always, thank you so much for joining in and making sense of all those numbers and what they really mean actually on paper. And as you said, I take point on that gold is 3 to 5% of ETF investment and silver perhaps at a 9%, but still a very, very small number when you look at the overall quantum there. Thank you so much for your time. And on that note, we will take a short break. Don't go anywhere because this discussion on gold and silver continues as we return.